So today is Crystal Ball Day. We're going to look at what to expect in 2025 and how to invest for the coming year. Fellow investors, bonjour. This is Mike Leroux, founder of Dividend Stocks Rocks and passionate investor. You're listening to the Dividend Guy blog podcast where I and my co-host Véronique will help you invest with more conviction so you can enjoy your retirement. Dividend Growth investors, bonjour, Mike Leroux here. You're listening to the Dividend Guy podcast. I am with my co-host Véronique. How are you doing today?
Mike, I'm doing good, but I have a big question for you this morning. Are you more of a December 31st or January 1st type of guy?
Actually, definitely a December 31st type of guy, but we kind of have like a semi-tradition where we spend December 31st with the same friends for several years now. And on January 1st, we typically sleep there because definitely I'm not able to take my car to come back home. And on the next day, I'm still looking forward to January 1st because we end up at Five Guys with the family. Because, of course, with a lot of wine, needs a big fat burger and fries. And this is pretty much like how we celebrate the end of the year almost every year. And I do have a fun story to start the show that has absolutely no link to what we're going to talk about today, but I just thought about that. And if my friend is listening to this, he's going to smile and laugh. So on like one time he had a new office that he actually owned the building. So on January 1st, before we go to Five Guys, he's like, "Hey Mike, I just want to show you this. So jump in your car with the family, and then we're gonna make a quick tour." And he was really proud of his office. So that was great. So we're driving on that morning, and it's like a sunny day, January 1st. First day of the year, people are already into I'm gonna have good habit modes. So there is that little woman with a little poodle, like a small dog, walking on the sidewalk, just enjoying January 1st. And there's a lot of snow, and there's a little bit of water on the street, but not so much, nothing to be worried about, right? Until at one point I'm watching my car's friend because I'm following him, and then I'm thinking, oh my god, I see the woman and the small dog, and then I see the water, and I'm like, he's not moving his car, he seems like not seeing what I'm seeing. And then eventually hit the water, and the water was actually a huge wave that completely
Oh,
showered the poor old lady with her dog. But the water went above her head. And while everybody in my car, the five of us, were staring at the scene and, of course, laughing, I see my friend's face in the mirror looking at me to see if we saw it. And then he was like, "Oh my god, I got caught by everyone." So yeah, so what a nice way to start the year. And I never get tired of say to tell that story, and I actually tell it more than once to all my friends and everybody that I know. So anyways, that was the story of the day. Now we can continue with the show.
and by the way, listeners, I know which friend Mike refers to, and he's a very sweet guy. He's not a bad guy at all. So I can't imagine his face.
Oh yeah, that was totally an accident. He did not saw that coming, and then when he realized, it was obviously too late. So that was the funniest part of it. It was no intentional at all. But anyway, so beware if you want to take a walk on January 1st. Just avoid busy roads or something. Just to stay in your neighborhood.
And by the way, Mike, I'm not part of your plans for January 1st, even though I'm family. So I know what your true colors are right now. So, I mean, it's all good.
Can feel the tension right now.
I'm just kidding. So let's discuss what to expect in 2025 besides Mike leaving me aside. So again, we did a 2024 stock market review in December. you can catch it up on at thedividendguyblog.com/204. But Mike, how would you summarize what happened in 2024?
So 2024 was an amazing year if you were invested. So of course, if you wait, you lose. We had the perfect example. So after a great year in 2023, a lot of investors may like thought probably it's not going to repeat itself in 24. Well, it was even better. We had a lot of noise going on around the election. In the end, did not move the needle much. Of course, politicians will always tell you that they are driving the stock market, but when you look at stats and facts, and we have reported that in the previous show, it has absolutely no impact. So just keep on investing and it's going to be fine. Again, if you're trying to position your portfolio for a specific sector, you're going to be disappointed more than often. So diversification is key. You never know which sector is going to perform or going to fail you as an investor. So you might as well be well diversified. Right now, it is a time to be a little bit more cautious, which means not necessarily keeping money on the side, but rather be more critique, more demanding in terms of
Mhm.
like financial metrics that you are following. You want to invest in companies with robust financial metrics and robust balance sheet. If you take guesses when the market is at all-time high, that could be very dangerous.
And with that in mind, what will be the great themes for 2025?
The first one would be lower interest rates. I think obvious. I mean, I'm not like it's not like a huge team that nobody saw coming. But
Mhm.
it is going to benefit for especially for a lot of like consumers. Yes, companies with more debt may benefited from it a little bit, but keep in mind that short-term interest rates do not have a big impact on how companies renew their long-term debt and their bonds. So it's like directed by the bond market. So of course, companies will renew their debt at a higher interest rate than they were before. So interest charges will continue to increase. But for the consumer, renewing their mortgages, for example, it's going to be good news. So maybe we're going to see people spending a little bit more. Of course, over the past 2 years, consumers were concerned about the high rate of inflation, and then they got
Mhm.
squeezed by the higher interest rates. Now that we have inflation that is smoothing up and we have lower interest rates, I'm expecting a little bit more like a stronger consumption. So for consumer discretionary, consumer staples, it should be doing well. Um, the rise of AI and the demand for energy, that is going to be a long-term theme. I would not be surprised if I tell you exactly the same thing in 2026 and
Mhm.
2027. So there are two powers right now driving this narrative. So on the one side, we have massive investment into artificial intelligence. So you have a lot of technology companies that are trying to gain their market shares, but you also have a lot of like regular businesses. And we did a few episodes on artificial intelligence in 23 and 24, showing that like pretty much all kinds of companies can now rely on some part of AI to improve their efficiency, reduce their
Mhm.
costs. So that is going to continue to happen. But the second vector here is the demand for power, so energy. Of course, you will need a lot of energy to fuel those computer making those calculations to generate artificial intelligence. And we have seen already in 24 that a lot of big tech like Microsoft inked deals with Brookfield Renewable. They are reviving a nuclear plant into, I think it's Philadelphia. So they are in search of more stable and hopefully greener types of energy. But definitely energy costs are going to be on the rise, I think, because the demand will be very strong. And I think technology evolves faster than the way of production for energy. So probably that we're going to have like some inflation around that.
Mhm.
I'm coming again strong for a third year in a row that I'm worried about a recession in Canada. Uh, I'm just an old record. You don't have to listen to me, but I would not be surprised. Anyways, I'm not. To be fair, though, if we have a recession in 25 in Canada, I'm not gonna raise my hand and say, "Hey, I told you so," because
Mm.
I've been expecting this for the past like since like in 20 for 23, 24, and now it's the third year that I'm just like, yeah. economics data are not that great. Unemployment rate is on the rise. The interest rate have been cut faster than any other countries, which is a good thing if you have a mortgage, a bad thing if you look at the economy in general. So, anyways, we'll see how it plans. But and I'm also a bit worried about all the tariffs noise that we have been hearing over the past month and a half. How it's going to unveil? Is it going to be just a negotiation? Are we going to have like a suffering period of like 6 months? Who knows? We'll have to wait and see how it goes. But if we have a lot of tariffs, it's definitely not going to be great for Canada. But I don't think it's going to be great for the US either. So we'll see how it goes. And finally, another theme that is quite recurrent is the massive spending in infrastructure, and also to adapt countries and our infrastructures to climate change. So,
Mhm.
regardless if you believe it's due to pollution or not, the climate is changing anyways, so we have to adapt. That is like just a fact. And then we have to spend a lot of money on our infrastructure, so that's going to drive a lot of sectors as well, moving forward.
And what are some of the stocks or sectors that you are the most optimistic about for the year?
I think that the industrial sector and the renewable energy, so mostly utilities, should continue their good momentum that they had in 24. So in 24, renewable energy utilities in the US did incredibly well. We can think of like companies like Xcel Energy or Duke and even the Brookfields, which have
Mhm.
been going on the sideways for a while if you look at like the past 3 and 5 years. But
Right.
last year, and then again, maybe it was just because they were lifted up by the rest of the wave. We'll have to see. But they are showing great metrics. There is definitely a great demand for their, especially for Brookfield Renewable and their power plants. Microsoft inked a 10 billion deal, so that's another sign where technology sector is going after those renewable companies. On the industrial side, I think it's probably a good time to look at railroads, not for 2025, but if you're patient, you're probably going to get them at a discount during 2025, and then it's going to eventually get better for them. So they went into a slowdown in 24. The threat of tariffs is definitely not going to have an impact on companies like CNR and CP. But
Mhm.
if you're patient, last time I highlight those, it was in 2016, while they were not trading at a high price, and it was a perfect moment to look into those. So that would be an interesting idea moving forward. And for the short term, I think engineering firms, WSP Global, Stentech, or companies that are evolving around like construction business, maybe Apogee on the US side. Those type of businesses could be benefiting from massive investment into new construction, into infrastructure. So they will be at the center of those massive investments.
And to get more stock ideas for the year, download our Top Stocks booklet at thedividendguyblog.com/top stocks. Mike, some investors may be tempted to fill their portfolios with the stocks that fit those teams, basically. However, the most important thing is to ensure your companies show solid financial metrics, right?
Yeah, definitely. Before you jump into a specific sector, or you want to make a play on a theme, I'd say the first thing you should be doing is to clean up your portfolio and clean every company's showing weak metrics. We're still driving a crazy market. But one
Mhm.
day or another, that market's going to slow down and we're going to have like at least a correction, probably a bear market. When it's going to happen, who knows? But when it's going to happen, because it will, if you have companies with weak financial metrics, you're going to take a big hit. So the best protection against a market correction is definitely quality. So if you focus on high quality companies, you won't have that problem. Of course, the stock price will go down, but it will quickly recover. And in the meantime, you will be rewarded for your patience by getting those dividends, and they will continue to increase.
So, this is why we will share the perfectly balanced portfolio tomorrow. Subscribe to the show now so you won't miss it.
So I'd made a lot of mistakes over the years as an investor. Of course, I'm not perfect. And one thing that struck me was even those huge mistakes in like individually taken did not have a massive impact on my portfolio. And at the end in December, at the beginning of December, we recorded an episode where I mentioned that my pension plan account actually hit another record of like showing a value above $300,000, starting
Mhm.
from 108 at the end of 2017. So in 7 years, roughly, going to $300,000. And the key here was simple. It's the diversification. It's to have that balanced portfolio that will protect your portfolio against yourself. So even if you're going to make mistakes, most of your selections are going to do great and they will compensate for the one that you miss.
Well, thank you, Mike, for sharing your thoughts about what to expect in 2025. Listeners, remember to visit our show notes and related content at thedividendguyblog.com/208. And to avoid missing any episodes of this series, subscribe to the show now. Until tomorrow,
Stay
stay
invested.
invested.
Hey, fellow investors, it's Mike here. I hope that you have enjoyed this episode. Please note that the Dividend Guy Blog podcast is at no time issuing buy or sell recommendation. Please do your own due diligence as this podcast is recorded for information and hopefully fun purposes only. Make your research, make sure you do your stuff. We're not responsible for your losses or your profit after listening to this episode. And until next one, stay invested.